I'm going to show you the easiest, simplest, and very interesting way to trade the Forex news, even if you're a complete beginner. So if you're a trader who still struggles to trade the news, this video is for you. So make sure you watch to the very end, because at the end of this video, I'm going to be giving you complete step-by-step process on how to trade the news, even if you are a dummy. So without further ado, let's just dive into it. But before that, you must understand what news trading is all about, because you can't just wake up one morning and start unrealistic expectation on how to trade the news. You must first of all understand what news trading is all about, where to trade it, how to trade it, and how to manage your risk properly. So news trading in forex market simply refers as making trading decisions based on economic news release and geopolitical event at different geopolitical time zones. Notwithstanding, traders aim to profit from the high volatility that often follows this major news, such as the interest rate decisions and employment data, such as non-farm payroll, the US non-farm payrolls, the inflation reports, such as CPI, as well as the political development. The bigger question is now, how does it really work? Before the news, traders may anticipate the outcome and position accordingly. Secondly, at the news release, price can move sharply upwards or downward depending on whether the data meets or misses the market expectations. Then lastly is after the news, some traders react to the actual market move, trying to ride the trend or even fade overreactions. But the key challenge here is that high volatility can cause slippage, the spread to widen, as well as causing unpredictable price spike, making it look too risky in the market, yet potentially rewarding. Since we now understand what this news trading is all about and potential impact in the market, it now boils out to where exactly are you going to go to actually see the statistics of this particular news outcome, so you can take advantage of them to either buy or sell. We have different websites where traders go to check the statistics of this news. We have investing.com, we have my Facebook, we also have forexfactory.com. But for the purpose of this video, we are going to be using forexfactory.com. Why? Because it is very, very easy to understand. You can easily assimilate, understand it, and it's beginner friendly. So come over to the website on your PC or your smartphone, Google. You now type forexfactory.com, forexfactory.com. So forexfactory.com is actually the website we use to check the news. Remember, you can also download the application on your Google Play Store, on even your iOS, which is Apple Store, right? But for the purpose of this video, we are going to be sticking to the website because it is very, very easy and it shows every information we need to see. So this is how the interface looks like. At the left-hand side, you're going to see the date of these different economic events are being released. Beside it, you're going to see the different time zones in which these different economic events are being released. At the middle, we are going to see the currency of different nations of this world. Like the abbreviation of Great British Pounds is GBP, which is Great British Pounds. You are going to see the AUD. AUD stands for what? Australian dollar, which the abbreviation of it is just AUD. You're also going to see the Swiss francs, which is CHF, for the Switzerland, right? You're going to see the euro, which is the European euro, okay? Now, we are going to also see the USD, which is that of the United States of American dollar, okay? Which is the abbreviation of United States of American dollar. So we're also going to see the NZD, which stand for what? New Zealand dollar, in abbreviation NZD, okay? Look at the impact. We have different colors. We have the red, the yellow, and the darker yellow, okay? Now, the yellow one you are seeing here is what we call the low impact news, because these different economic news are being released in the market in different currencies. These different colors of this impact section, they have their different impact in the market. They are ones that affect the market, causing a major spike in the market. Where there are ones that literally affect the market on average, which means they don't really move the market just like that, but they still move the market. While there are ones that literally don't actually have any impact, which is they literally don't have that, much impact in the market. Now, if you look at the one that's showing yellow, this one are called the low impact news. This one literally don't move the market just like that. While the one that's showing darker yellow, they are called medium impact news. These ones move the market on average, not that, huge. It doesn't cause that huge spike in the market. Now, the one that shows red, this is the major focus for traders. These ones are what traders focus on, because they believe that these ones are the ones that actually cause this high volatility spike in the market, moving the market to help traders to make decisions on whether to start buying or to start selling. So this is the traders' major focus. So the next one is this written text you are seeing here, these written texts are different economic events and political events that happen at different regions, at different geopolitical zones. We have many of them, like the risk house price balance, the employment change, unemployment rate, the GDP, and the claim and construction. So these are different economic events as well as political events that happen in these currencies you are seeing right here. This is the high impact news, which is the one that shows red, is major focus. Traders tend to actually align with the economic news that actually fall into this color that shows red, high impact news. Okay, now if you look at this particular one, you are going to see details. Details is what the written text that actually tells traders that this is what is expected to happen. If this happen, this is what to expect to happen if this happen. And that's where the details came into place. This is what give the details about the news, what is expected to happen according to the news. If it's going to come out negative, it's going to be there. If it's going to come out positive, it's going to also be there. Now, before we come to details, diving deep into the details, let's look at the actual. The actual is the final result of the news. And before the news will be released, there will be no actual here. There will be no actual right here before the news will be released. Okay, it's after the news release that's when you are going to see the actual, because the actual is the final result of the news, the actual result or actual outcome of the news. Now, the forecast is the traders' anticipation, what the traders anticipate to go in their own favor. If whatever that will be released on the actual section align with the forecast, it means it's going to be good. It's going to be good with the traders' bias, traders' intention, okay? Traders' anticipation, what they anticipate, the positivity that they anticipate. If it align with them, that means it's going to be good for that particular currency. Now, the previous here is just the past actual that was released in the past month. So what traders majorly focus on is just the focus and the actual. Now, I'm going to be using one particular news for a case study. Okay, I'm going to be using this particular news on USD as the case study. Before that, we have what we call the base and the quote currency, which we are still going to come back to as we move on. So we are going to use this one, USD currency, the news that affect USD, which is the type of news that affect this USD. It's called PPI news, which is a high impact news because of the red color we are seeing here. And you can see the time the news was released, just 1:30 p.m. Nigerian time, which is like West African time. Okay, just in case you are watching this video and you're not in Nigeria, you can still check and see the time it was released according to your own time in your own country. Now, let's look at the details of this particular news. Okay, the details of this particular news is the usual effect. This is what you should be reading, the usual effect. Now, the usual effect of this particular news says that actual greater than forecast is good for the currency. Now, this means that any actual that will be released in this particular news must not be less than traders' anticipation, which is the forecast. So if it is greater than traders' anticipation, that means it's going to be good for USD, which is the currency. Okay, that's why it says that actual greater than forecast is good for the currency. So that's what the news says. So if you look at the measures is just trying to tell you the meaning of that particular news. And this core PPI simply means change in the price of finished goods and services sold by producers, excluding food and energy. Just the news meaning. That's what it's going to tell you. Now, the frequency is just telling you the number of days it will be released, or it's being released every single month. So it's released monthly after 13 days. So it's released monthly about 13 days after the month end. Now, looking at the history, these are the past news that was released, past related news that was released. So looking at the history, these are past related news that were released in the past month. You look at March, April, May, June, and July. This is August. Past related actual or outcome that was released on this particular news event were all negative. So let's look at the actual that was released in this particular news on the 14th of August 2025, exactly 1:30 p.m. Now, this is where you now have to look at the actual. The actual that was released here is 0.9%, while traders' anticipation is just 0.2%. In other words, the actual here is greater than the forecast, which is good for the currency. It's not less, because if it is less, you are going to be seeing this color showing as red, which is negative, just like you are seeing on the history here, red showing negative. But since it shows green, it means that it is greater than the forecast. That's why you are seeing green. And since it's greater than forecast, it means that this USD will be bullish USD will be bullish as a currency. United States dollar will be bullish, and traders will now head over to the trading view and start making a buying decision based on the volatility of this particular currency. Now, coming back to when we say base and quote currency, this is how to make proper decision based on the pairing of these different currencies. Now, in the case of USD here, USD is acting as the major currency. This is United States dollar. So it's acting as the major currency. In other words, any currency that we're pairing with USD will now be acting as the counter currency, otherwise known as the quote currency. USD will now be acting as the base currency. It means that USD is the major currency. Any currency that's pairing with it will be now a counter currency, and you want to use that currency to either pay to receive or pay to get USD as a major currency. In that case, currency pairs like USD will be acting as the base currency, while JPY will be acting as the quote currency, which is the counter currency. It is what you are using to pay or receive USD as the base major currency. And the news is greatly affecting the USD currency based on what? The fact that it is the base currency. So it's greatly affecting it. Okay. Since the news came out positive on USD, it means that USD is going to be buying. It means that traders anticipate for a bullish momentum, a bullish spike, a bullish volatility. So in this case, if you look at this particular candlestick, this is 14th August 2025, and the time says 1 p.m. So this is a 1 o'clock candlestick, okay, on a 30 minutes time frame. So when you are seeing this candle, it means that this candle and this candle, two of these red candle are 1 o'clock candle, 30 minutes, based on the fact that we are on 30 minutes time frame. So since this one is 30 minutes candle and this one is 30 minutes candle, you wait for this 30 minutes candle to close, and this 30 minutes candle will round up 1 o'clock. Okay, now the next candle that will form is a 30 minutes candle, and exactly 30 minutes the news will be released. So you must be ready, you must be prepared, you must prepare yourself to actually make this trading decision to either buy or sell based on the actual result. So immediately this candle close, because you must wait for this 30 minutes candle to close, so that we can enter another 30 minutes candle to exactly hit 30 minutes before the news release. So immediately this candle close, now traders will now wait for 30 minutes. The next candle that will close for 30 minutes, this is when the news will be released. But before that, you want to head over to 15 minutes time frame or 5 minutes time frame to find your entry, to make your entries more concise, so that you wouldn't want a situation whereby the market will take you out of the market and still move in that positive news direction because of sweep of liquidity. So you want to actually look out for where you want to enter the market immediately, because news act very, very fast, and you don't want to waste time, trying to wait for ages, and before you know it, you already missed the spike. So let's look at 30 minutes time frame again. So looking at 30 minutes time frame, now let's look at what happened thereafter. So you can see this 30 minutes candle, immediately the news was released, and the news came out positive on USD currency based on the actual outcome. So the news came out, since the news came out positive, this 30 minutes time frame, exactly 1:30. This is a 30 minutes time frame, exactly 1:30. So before this 30 minutes candle will close, this is when you already catch this big spike from here, okay? Because you need to act fast. You need to act fast, very, very fast. So immediately this candle close, this red candle close, next one that will open will be a 30 minutes candle, and this is when you enter, okay, immediately after the news was released. So immediately after the news was released, the market will spike up. Remember, for news trading doesn't respect structure. The market can be bullish structure or bearish structure, and the market, because of the impact of this news, it will act otherwise. Either move up while the market is a down structure, which is bear market, or move down while the market is a bull market. Yes, it doesn't respect market structure. So what move it is the impact of the news. So since we are currently on USD and the news came out positive on USD, so it's going to be buying on USD because it came out positive. Remember, JPY is acting as a quote currency, right? Now, coming to the other currency pair like GBP USD, this is where we now apply the quote currency effect in this type of market. Why? Because looking at GBP USD, GBP here is acting as what? GBP is acting as the base currency, while USD is acting as the quote currency. But then again, if you ask yourself, will the market buy here or will it sell here, since we have GBP acting as the base currency and USD is acting as the quote currency? The answer is yes, the market will definitely sell. Why will it sell? Because here, GBP, which is acting as the base currency, is much stronger than USD, okay? Since it's much stronger than USD, but the news came out on USD acting as a quote currency, this simply means that since the news came out positive on USD, that is referred as a weaker pair, okay, as a weaker quote currency, right? But the news came out positive, the strength of USD is going to increase against GBP, meaning that GBP USD is going to drop, is going to sell, because GBP is acting as the base currency, is acting as what? As the major currency here. But since USD have overpowered it, it means that GBP USD is going to be selling, is going to sell, okay? Why the one that is USD is acting as the base currency is going to buy, which is USD JPY. So in this case, you can see this candlestick, right? This is a 30-minute candlestick, right? Now, heading over to 15 minutes time frame as well to actually make your entries more concise, reducing risk, okay? You now place your entry right above here on that 15 minutes time frame, okay? Place your stop loss above this candle, right? So place your position above this candle and your take profit just 2 risk to reward. You must target nothing less than 2 risk to reward. So when you risk 1, you're expected to make 2. You don't just want to start holding the market because you want to make 5 risk to reward. It is very risky. Remember, immediately the news was released, the market will now do what you need to do in the space of 45 minutes. Okay, within 45 minutes, market have settled down and still continue in the previous direction. So you don't want to start waiting for ages before you can be able to do something or take your profit. No, you just want to take scalp and get out of the market as soon as possible. Okay, and that's why risking 1 to get 2 is the most ideal trading when it comes to what? News trading, whether you are buying or you are selling. So looking at it right here, let's look at what the market later did. So remember, this 30 minutes candle, so immediately the candle was closed, then the news, you already seen the news that came out positive. You already know that the market is going to come bullish on USD JPY, but bearish on GBP USD based on the base and quote currency effect. So right here, let's see what the market did. So you can see what the market did here. The market actually sold this 30 minutes candle, okay? You can see 130, August 14, 2025. This is 130 candle. So this 30 minutes candle actually sold aggressively and still sell again, and the market continued to sell and it smashed full take profit. So meaning that if you risk 1 here, you already made 2 in this type of markets. That is just it. Remember, for this trading, you must know how to manage your risk properly. You must know how to manage your risk properly. So any money you are putting in this type of market, in this type of trading, it must be something you are willing to lose. You can afford to lose it. You don't just enter the market blindly, because if you enter the market blindly, you're going to get yourself hot. So hence, you consider all these things I just mentioned in this video. You'll be able to trade the market. You'll be able to trade the news like a professional trader. All right. I hope this video is helpful to you. I hope you learn something in this video on how you can be able to trade the news like a professional trader. If you do, don't forget to smash the like button, hit the subscribe button so that YouTube will recommend this video to traders like you. And if there's any video you want me to make concerning any strategy, help me drop it in the comment section. So I'm going to catch you up in the next video. Peace.